But in the thick of earnings, let's address another set. We've got Ashishkumar Chauhan from BSE joining in. Ashish, hi, morning. How was the revenue contribution from your key categories, listing fee as well as transaction charges in the quarter gone by?
Basically, the last year, that is 2018-19, was not that great for BSE's revenues in terms of the operating income. There are largely two areas in which we operate in. One we call services to corporates, which includes listing, IPOs and other things. Last year IPOs were not there almost the entire year because the market was not doing so well, and because of that we had some dip into that. And in terms of the transaction charges which we levy for transacting on BSE, that includes trading on equities, derivatives, currencies, and also mutual funds. Last year we had a good upside on the mutual funds because we started charging first time in the mutual funds. Almost 29-30 crores have come in the mutual funds last year, but we had a dip in the transactions for equities, and in a way that the larger stocks also didn't do so well, but more importantly the smaller stocks which are exclusive to BSE did really badly in terms of the transaction volumes because of the fact that the SEBI had new regulations on the way the mutual funds are put into different brackets of large cap, mid cap, small cap, and they put in certain new conditions, because of which there was a big sellout into the small cap and mid cap stocks, which actually hurt BSE's trading volumes and subsequently BSE's transaction charges. But overall the total losses or total profits have gone down from 214 crore for the year to 194 crore. So total we have had a 20 crore reduction in our overall profits compared to previous year.
Any challenges that you're seeing on the core stream like mutual funds after the recent norms that we have of the reduction in commission, or do you think that the impact of that is now receding?
See, basically we are doing very well in mutual funds. Compared to last year, we are doing pretty much 110% plus month on month. And so last year, first time we started charging mutual funds. Last year it was 29-30 crores. Hopefully this year we'll do much more than that. And so that revenue stream, which was non-existent till last year, has started now picking up. In terms of the equity markets, which were not doing so well, especially the small cap stocks have started doing reasonably well. So overall, this year, 2019-20 would be probably better off, if not similar to last year. Of course, IPOs we are awaiting post the new government comes in. So if there are more IPOs, BSE will end up doing well. But overall, now we seem to have started gaining ground in certain areas like in currencies, in bonds, in SMEs, and so on and so forth. And those are the things which we are going to actually have more and more revenues coming from.
How do you see the SME platform, insurance, bonds, the INX, all each contributing over the next 12 months?
See, insurance has not yet started because we have not got the approval from the regulator in the insurance side. That is a joint venture where we will be owning only 40%. The INX, India International Exchange, is doing exceedingly well. Recently it did almost close to $3 billion turnover in a day. It runs 22 hours a day pretty much. Other than weekends, pretty much every day. Only thing is it doesn't have the ability to charge. Recently, NRIs have been allowed, and even the foreign individual investors have been allowed last week by RBI. And so those are the positives for INX. As and when we are able to charge, it will start contributing positively. Even commodities, where we are doing very, very well compared to our own expectations. In many sort of commodities, we are doing 25-30% volumes on many days, and that's a very heartening thing for the first few months of starting. At the same time, we are not charging because we are new, and so there are areas we are not currently charging. But then mutual funds also we didn't charge for first 9 years, and 10th year we start charging. So that's how I see it. Wherever we get a good market share and market power, will start charging. IPOs are currently our mainstay. Currencies we are doing very well, where we are also having revenues. Mutual funds, of course, the traditional listing fees and IPO, basically the trading volumes and so on and so forth. Those are also important aspect today. But the newer areas are growing, and that's where at some stage, like what happened to mutual funds, will start contributing even revenue-wise going forward.
So what will be the cash on books after the buyback and dividend payout, and also your FY20 strategy on growing investor base, increasing market share across focus areas?
So basically, we do connect to many more people today than we were doing before, including we have got now almost 24,000 plus IFAs who are selling mutual funds today on our platform, but later on we may be doing many other things. The other decisions which our board took today, one was appointment of chairman, because our chairman had retired on completion of his term in February this year. So today the board selected Justice Vikramjit Sen as the chairman of the board, and subject to, of course, SEBI approval. So it will go to SEBI for approval. BSE board also decided to buy back shares worth 460 crore rupees at the price of 680 rupees per share on a tender basis going forward. Of course, the AGM date has been decided as July 15, and so post that BSE will have to decide on the date for buying back and so on and so forth. And BSE board also decided to give total dividend of 30 rupees per share, out of which 5 rupees has already been provided as interim. So 25 additional rupees will be distributed as dividend going forward. So these are some of the more interesting and sort of information which I thought the investors should have, that BSE is returning back capital. BSE had total 1800 crore unencumbered cash in its balance sheet, out of which almost close to 25% of that is now being used up for buying back shares.
Thanks much for joining in and giving us a sense, Ashish, of how things are shaping up for the company. That's the stock of BSE under a bit of pressure.